last call we had, like the first call you joined, you hit
Yeah.
the first, what was it? The first 1 to 40 you hit, and now you almost got your first 1 to 100 already. Come
Yeah,
on, man. You're
it's happening
crazy.
fast, man. It's happening fast, bro.
Wait, who is that? Who hit the 1 to 100?
Oh, it's Saki's in the house as well. Oh,
What's good, lads?
it's getting serious. What's good, Saki? What's good? Man, you've been quite quiet a little bit lately. Hope you're good. Hope you're good.
Yeah, just a bit busy with work in uni, to be honest. Yeah.
Yeah, it's fine. It's fine. Take some time off if necessary. You can crush it every day, so no hurries, no hurries.
How are you been? How's things on your side?
This week was crazy to say the least, man.
I saw.
Yeah, it was. I hit that 1 to 400 plus, which is kind of mad.
Okay.
But yeah, I shared that too. But
solid.
Yeah, it was a good week. It was a good week for sure. So we wait like let's say like 3 more minutes or whatever. So so how's everyone doing? How's everyone doing? First of all, glad you joined in. Also, yeah, that's good. That's good. How was the training week for everyone?
Really good week for me. I'm about 40% for the week.
50%. There you go. Is it Michael?
40%.
40, man. Michael, yeah. Absolutely beast, man. Congrats to that.
Nah,
so you make it 70 next week.
Definitely. My wife was shocked. She's just like, wait, because I literally just finished. I left work about a few weeks ago, so she's gone back to work. So she kind of covers all the expenses. So then whatever I make is like on top. So it's helping. So she's like, Michael, you need to like, help her quit her job for making enough money.
Oh, so man, that's amazing, Michael. Keep it up, man. I hope the session will help you out today to crush it even more.
Yeah, definitely. Looking forward to it. I know everyone's been looking forward to this today.
Yeah, but man, 40% in a week, that's not bad at all, right?
Not bad at all, mate.
Man, amazing to hear that. Thanks for sharing, man. Thanks for sharing. No, cheers, that's amazing.
I've done really well since Eunice's call. I think I'm like, literally. So last week I don't know. It was just like such a confidence boost. This week I think I'm up just under 140%.
Oh my god! Okay, there you go.
Yeah.
That's crazy, man. Karen, yeah, you absolutely beast too, man. But yeah, Eunice, man, this guy drops nuggets like KFC, man. It's crazy,
honestly,
right?
Yeah, it's crazy. It's crazy.
Eunice is one of the best in the game for sure. So
I'm gonna be copying that line.
Okay, so I think everyone should be in by now. So everyone, hello and welcome. So thanks for joining in. And today will be more of a focus for the guys, which, I mean, we have so many great traders in here already, right? Which is amazing to see. And obviously that fills my heart with pleasure, right? But we also have some guys in here which still having a little bit hard of a time and yeah, struggle a little bit. And we will focus on that and try to help them out right now, right? With how to identify IFCs properly, how to manage trades, how to pick targets, and a lot of stuff. And there's so much material still to be included. So you guys probably don't know what we have prepared for you. I mean, it will be so crazy. And I'm talking about taking over craziness, right? I mean, this industry will be changed for sure. So no doubt about that. So glad you all be a part of it. And I even made an Instagram post about it. So yeah, you can be a part of it or you will be a witness, but it will happen for sure. Like, show me one IG guru or even like education service provider or whatever, which only can do 10% what we do on a daily basis. I mean, there's nothing out there, nothing, not even close. So we will take over for sure. And yeah, you all will be part of it. So that's amazing. Okay, let me just try something here because this will be a learning experience for all of you. That will be fun. That will be a lot of fun. Let me share this. You should see this EU. I hope so, at least. Can you see that?
Yeah.
Okay, amazing. So what we will do in a few minutes, try to draw on the screen, please, everyone.
How do we do that?
There should be like a bar. Okay, looks good. So please, everyone, check out that if you find the option to draw on the screen.
Need to look.
So it should be on the lower side of your taskbar from the Zoom. There should be like a small arrow to the left. Okay.
Mine doesn't come up with annotate for some reason.
Yeah, neither does mine.
Okay, just check it out. It should work. It seems to work for a lot of people,
I
so
found
it
it.
should work
If
for
you
you
go
as
to
well.
if you go to the top,
Oh, it's on the top. Okay.
yeah, and then it
Okay.
gives the drop down for annotate.
Okay. So seems good for everyone.
yeah.
Okay.
Yeah,
then.
I can do it now.
Okay. Let's stop this right here. Okay.
Word on the screen.
Okay, there you go. Okay. So what we will do, okay, it's good. It's good. Yeah. People drawing ticks. Okay. Professionally.
Wait, what IML, man?
Okay, it's good. So what we will do in a few, okay, it's fine. Okay. So what we will do in a few minutes. So I want you to rate yourself right now. If you think you're really good, then you will choose the color red. If you think you're at the beginning and you're struggling a little bit, take the color blue. And if you're in the middle, take the color yellow. Okay, so if you're advanced, if you think you're advanced, take red. If you're at the beginning, take blue. And if you're like in the middle, take yellow. Okay, so we only have 3 colors. So we see some advanced guys, we see some middle guys, and we see some beginner guys. Okay, that's good. That's exactly what you want. Because you will do a lot of examples, and you will see where the issues lie, if you want so, right? Okay, so sorry for that. Okay, that's good. Okay, but first, before we start, I want to say something, because actually we have such a great community in here. I actually want to thank everyone, because it's kind of amazing. Like, you guys supporting so much. It's just really amazing. Like, I created the Instagram account like 5 days ago, and yeah, you already pushed it so much. It's crazy. We have such a amazing community. So thanks for everyone for the support, and yeah, just for sticking around and helping us grow and whatever. So that means a lot, and that's actually something I want to ask you guys, because I know some people don't do that right now, right? I mean, obviously they stick around in the chats and something, but they don't really share and don't really like, let's give the example, like Alex did a call like a few days ago, right? And there was 200 people in the call, and then he asked for like if someone can share the story or whatever on Instagram, and only 6 people shared it on their Instagram, right? And if you think about it, that's not really nice, right? Because he drops a lot of value, obviously, for free, right? It's not included by the bootcamp or whatever. So we should change that a little bit, right? So just make this guys a little bit proud, and let's just make an Instagram post right now. I mean, again, if it's too much for ask for, that's fine. Just let me know. But for those guys who do something like that, you will get rewarded, right? Because if the company grows, if we're getting motivated and stuff, we obviously will drop more value. We will drop much more content, and we're just getting more motivated to share something like content-wise, right? So just please go to the Instagram right now, make a picture of the screen or wherever, make a selfie with your dog, I don't care, and just say something nice or something bad, I don't even care. Like, it's up to you, and tag me and tag WWA Trading, right? That's all I'm asking for, right? I mean, obviously I will share a lot of knowledge and a lot of nuggets, and that's everything I'm asking for. So I guess that should be fair for everyone. If not, just let me know. Direct him Instagram to focus. Okay, that's fine. But for the guys who have Instagram, and for the guys who have trading related community, that would mean a lot, right? If not, that's fine too. But I mean, yeah. support is amazing. So if you could do that, amazing. If not, yeah, just let me know anyways, and you will get rewarded for the guys who will do that. Because yeah, we will share a lot of knowledge in the upcoming days. So yeah, there we go. Anyways, I hope everyone has done it. I will check it later. And remember, I have a really good memory, so I know exactly the guys who support and the guys who just ghost, right? So yeah, just keep that in mind. Okay, but this is EU. This is EU for like the last weeks. You see all my trades, and that's actually trades I took, right? It's all the trades I took. It's not like I'm just mocking up crazy stuff and whatever. No, I mean I posted some of the trades in the Discords and whatever. You know, all this craziness. I don't even post that much anymore. But yeah, these are some trades of EU. And how is it possible? Like I even made an Instagram post when you can trade up, down, pull back, exactly, up and down, sideways, whatever, right? To one point, you can, I will not say the word predict, but you have a really good understanding of where the market will go. And you look at entries in these zones, right? And it is possible. I show it on a daily basis. And yeah, my mission probably is, yeah, to get you guys in the same position, right? To the same exact position where you guys can crush on a daily basis. And just think about it. I posted EU on one day where I showed like what was it? Like 3 1-30s, 1-110, 1-120, whatever, on just one day. It is possible. You can absolutely crush it in just one pair on a daily basis. So yeah, you will all be on the same level. It just takes some time, and there's still a lot of concepts we have to include. And yeah, we will go there step by step. But today we will focus on the solid stuff, on the foundations. For those guys which are still having a little bit of struggles, we will get you to a next level first, and then we slowly but surely will get into the advanced stuff. Okay, but for now, I will share some very important foundations so you guys have a better time to, for example, identify proper IFCs, don't get faked out, don't focus on the wrong IFCs or whatever.
How you doing?
Yo, Steven, what's up? Okay. First time going, okay. Okay, let's start. I have an example here. I will close the chat by now, but we will go into questions later, okay? So just keep that in mind now. So this is GU, just a random snippet of forever. It doesn't really matter what day it is or whatever, but you all choose your color hopefully by now. So we should have red, we should have yellow, and we should have blue. Okay, so just look at this right here. You could say you have this complex pullback or whatever, right? I mean, you have a solid uptrending market, right, or whatever. So would you look for an IFC, for example, in this area? Just draw on the screen if you think, like, make a line if this would be a valid IFC. Okay. Okay, we even have some experienced guys which would take this IFC. Okay. Let's delete this and watch what happens. Boom. What happened? It just went through it like nothing, like butter. Why is it? Why it is? So that's a stop bot for sure. Why is it?
That was the inducement, right?
Exactly. But we will come to that in a second. So let's see. What is this? Where does it tap into? Looks good, right? So again, draw on the screen, please, if this is a valid IFC. So I mean, it gives you a solid chirp back already. So is this a valid IFC right here?
Yeah, the imbalance area right there.
Someone wants, guys, I want to see some reds too. Where are the red guys? Okay. Okay. A lot of guys would see that. A lot of guys will not see that as well. So that's good. Because let's see, let's delete that again. Okay, let's see what happened. So you got this reaction. Then you couldn't even say, okay, let me jump into the 1 minute, because it actually gives me this reaction from this IFC, right? So let's take this under 1 minute. Let's wait for an imbalance. I think everyone can agree that this is an imbalance, right? So we could wait for re-entry right here. Would you say this is a valid thing to do or not? Again, draw on the screen, or yes, no.
Nah, for me, I would wait a little bit more.
Yeah, you need to wait to give it some room to breathe.
This doesn't make sense because nobody starts analysis on one time frame and decides what they want to enter.
Yeah, exactly, exactly.
Also,
So
it just reacted off a supply zone, so there's nothing conclusive yet.
Exactly. Okay. Oh, very good, very good. Because it looks good. It looks good at one time frame. Glad someone pointed it out. It looks really good at one time frame, right? But that's just not enough. Because if you would look at this, looks not bad at all. Gives you a reaction from it. But then what happens? Boom. You would get stopped out again. And you wonder like, what is going on? Because I took this from this IFC. Why is it stopped me out? And then it even keeps moving lower. And then you're like, oh my God, this thing will move forever. And what happens then?
Shoots up.
Boom. It shoots up like crazy, right? And you took this and you took this, but you got 2 stop outs, and then you probably you will not take this trade anymore because you think, oh my God, it stopped me out 2 times already. This probably will shoot down. What happened?
Was just
Sorry?
No, go ahead. Sorry.
Okay, so let's give me you the reason why this happens. Just let me delete
Liquidity
these
grab.
drawings.
It looks like an accumulation.
Okay, so yeah, good approaches, good approaches.
It
So
was
the
an
reason.
accumulation, but it went to H1 structure.
Okay. So what we should do instead, and that's something you should, from now on, should always do before you're looking for an IFC. If you're a yellow guy or a blue guy, that's something you should always keep in mind. Look for liquidity first before you look for an IFC. What do you mean by that? You have this liquidity here. This is your point of structure break, your major structure breaking point, and your liquidity. Awesome. Whoever drew this. This is your most valid liquidity build-up zone. You can call it equal lows. You can call it whatever. End of the day, it's very important. Let me just delete that. There we go. It's very important that the market induces, and this is the inducement you're all speculating so quietly, equal lows liquidity is building up here. So a lot of stops lying below is lying below this area. It can be sell stops. It can be stops when someone bought this thing, right? I mean, if you bought it here, you probably put your stop below here, right? That's why this is the inducement. And you even can see it on a smaller time frame exactly what happens. You have this equal lows right here. You have this equal loads building up. FU candle takes out this liquidity. And where does it tap into? It taps into this IFC. And this becomes your valid IFC. Not this, not this, not this, not this, not this. Why this? Because it is the last IFC in a valid liquidity grab zone. So you have this false break of structure once again, building up liquidities. FU candle taps exactly into this valid IFC now. Okay. And this is how you could, if you only spend attention to these details right here, you will not look at this or this or this or this or whatever IFCs anymore, because you wait for the liquidity grab first, build up liquidity in the smaller time frame, and then gives you the FU candle. FU candle taps into the valid IFC now, because again, it grabs liquidity first, and then you can trade the reaction. Either take it from here or you wait until now. You can take this IFC. Now it's valid because again, the whole structure, the whole process inside leading into the trade is valid, because you're trading off a bigger picture play, right? So this is a solid trade. I mean, yeah, sure, you can wait for the break of structure now. You have this break of structure, you have this lost IFC now, and you can take it from this. Exactly, that's what you do. But you have to know that, again, the important thing in this whole play is the leading into the IFC. Because as I showed you in this example before, you could say this is an IFC, you could say this is an IFC, you could even say this is an IFC. But where are the liquidity traps? There's no liquidity traps in here. So they will break this structure even once again, take out this liquidity, and then tap into an IFC. So it's like even you can follow this plan. Look for the major structure break, look for the next liquidity zone, and then look for the lower IFC, and then trade the reaction. So it's a 4-part process you always look for: major structure break, liquidity, FU candle into the IFC, and you trade the reaction. Either like the banker block scenario, or you wait for the break of structure and take this trade then. Okay, that's very important. If you only implement this into your trading, that will be a major difference in your trading. I can even guarantee you that, because that's the basic thing I use only if I enter a trade, and you can see the results right on a daily basis. So I take never an entry if it's not having this characteristics in it: liquidity build up, equal lows, FU candle taps into an IFC. That's how you properly identify valid IFC zones. Okay, so let's give you a walkthrough.
One
Yeah.
question on this one.
Sure.
So right here, you have liquidity as well. So would you consider this one too, or no?
No, like you can see the difference between this equal lows and this equal lows, right? You cannot say this is equal lows because you can say this is equal lows or this. I mean, it has to be a solid structure equal low point.
Okay.
And that's not that's not even a pullback or whatever. That's just like, yeah, in the run, right? Because no, that's not an equal lows. That's just inside like a run up. But this is not. They're building this equal lows on purpose, right? And I talked about it in my first call and whatever. And think about this concept for a second here. When does the market make money? When?
London and New York.
Yeah, and if you compare it to yourself, like when does the market make money from you? Because obviously, like the numbers are from 90% of people losing money. Why does it happen? When they take us out, when we lose, okay.
When we lose, when they steal our money.
Exactly. So think about it. If 90% of people losing money in this market, why are so many people trading? If you know that 90% of people are trading, lose money, why so many people are trading? Why is it? Why still so many people are trading? Like banks, institutions, countries, retail traders, whatever. Why are the people trading?
Everyone wants to make money.
Yeah. Why not? I mean, what else?
It's because they let retail traders win once in a million years.
It's like the casino, isn't it? The house always wins in the end, but they'll give you a bit of their crumbs once in a while.
Okay. So let me say the reason. The reason is because you think you know what you're doing. The market shows you something and you think, oh yeah, I saw this before. I know this, I'm familiar with that, I will risk my money on that. And that happens to every retail trader out there, because what they're doing, they're drawing trend lines, they're drawing support stuff, Fibonacci stuff, and they're back testing it. And obviously, if you back test it, it works pretty good. Because, yeah, sure, you can say supply turns into demand, support turns into resistance or whatever, on a back testing thing very easily. Sure, I can draw like a crazy trend line now from here to here and say, yeah, if it retested it, I just take the buy and whatever. but it's so easy on doing it in hindsight. So people think they know what they're doing, but actually they're exactly getting a victim from that, because they know exactly that people think like that, and that's why they're building these traps on purpose. And one guy even said it in the chat. They have algorithms like even IPTA, it's called, where how price is delivered. So the algorithm knows exactly the retail strategies and builds these points on purpose. It get the trend lines and stuff, and the support and resistance stuff is getting built on purpose to make the people believe that it is there and you can trade it, right? And guys, please mute yourself. It would be appreciated. But yeah, that's exactly what you always have to keep in mind. So people will get induced all the time. That's the only way that people are willing to risk their hard-earned money into the market. If they think they actually could make more money, right? So you have to think the opposite then. With 90% lose, just think the opposite. So let's walk you through some examples. Let me just end this and share my other screen, because this will be a really great learning experience for you guys. There we are. Okay, you should see that. And now the time comes when you guys need to do a lot of drawing, because we will give you a lot of examples. Okay. Let me open the chat here. Okay, so what we will do is we will start at the 15th, no, the 14th. So it is here. Okay. And what we will do is we walk you through a week. Okay. So you have this major zone here. Okay. So this is called a trap zone. Okay. Just for beginning purposes, that's something a little bit more advanced, but just this taps into the 4 IFC, right? So this becomes your trap for the week, right? So you should always identify this trap zones and try to trade away from that. That's very important too, because again, it's liquidity traps. You have this equal lows building up here. This FU candle taps into the 4 IFC. So this becomes your valid trap zone for the week. So now the Monday starts, right? So we are going to the charts, just see what happens. And we build up into the day. Nothing really happens because it's Asia session. Let me just change that here because that's a little bit annoying. Give me a second. Okay, that's better. Yeah, that's better. Okay. Okay, so we have to build up, so nothing really going on. So, but now things getting serious, and we are actually in London Open, okay? The only thing we know by so far is we have this trap zone, which we actually want to trade away from. Okay, so what did I do in Asia Market Open? So what is this? Equal lows. Could it be equal lows? What is it? Is it liquidity buildup?
Yeah,
you can see. Okay, okay. Very good, very good. So what is the next highest IFC point in a 1 hour perspective after this equal highs have been built? Liquidity buildup. Yeah, okay. Very good, very good. Very good. Okay. Very good. Okay. Let's delete it again. I want to delete it, please. There we go. So let's move. Oops. Let's move into the 5 minute now and see what's going on. We noticed that this has been our 1 hour liquidity zone. Let me just draw it like this. So this becomes our 1 hour point of interest, right? So, but technically, the 1 hour imbalance is filled when the market reaches this areas, right? Then the market is filled properly. Okay, I hope everyone can agree with that, because the imbalance is filled once the market hits this wick right here. So if you keep that in mind, the bigger picture, so we look for this to be filled at least, so the imbalance is properly filled, and this, again, they're building up liquidity. So let's see what happens if we getting into this area. So we're having liquidity building up, equal highs being showed. What happens again, even again, look at this, they're building liquidity like crazy. They give you this false illusion that this thing will hold and will go to the downside, right? They give you this false equal highs. Even here, they do it once again. They're building up liquidity like crazy. This one is the wrong one. Why? Your 1 hour IFC is here. So you should not look at this one. The 1 hour imbalance has to be filled, not this one. This is your 5-minute IFC, the false IFC. You should not look at this one. You should look at this one here, because it's the 1 hour IFC. So again, look at this. Look at how crazy they're trying to give you this illusion that this thing will hold. And if I see something like this, there's a 99% chance that this thing will crush to the upside. That's, if you see something like this, it will be so sure and obvious that it will crush down. It will crush up and then down. But it will break this areas for sure. Because think about it like in terms of money. There's so much evidence for the retail traders and even banks and whatever that this is some area which hold. So they're putting their stop losses above it, and even people put buy stops above it. So if it breaks this area, they want to buy it, right? Craziness, but that's what people do. Boom. That's the first inducement. Okay, that's the first inducement to break the liquidity. And again, what does it do? It gives you this false IFC thing in here. It's not the right one. You have to keep the bigger picture in mind. You have 1 hour IFCs in here. So you should not fall into this trap and think like, okay, you have this liquidity trap. Now, this becomes my IFC. No, that's exactly what you should not do. Look the bigger picture, the 1 hour IFC. And boom. Taps exactly in our 1 hour IFC in here. So now it is technically filled. It does not need to go higher anymore because the imbalance, if you look at this, there's not really an imbalance other than here, but it will not go so high. If it is, if it will go so high, yeah, we will risk it with one attempt, right? But that's so far away. If you want to focus on this one, we will not. The 1 hour imbalance is filled up right now.
Annotating, because it's really distracting.
Yeah, for now it's good because people actually want to. But I will ask some questions. Then it's really fine for you to and I will give in a second. Okay, that's good. So technically, the imbalance is filled. If you look at the 1 hour once again, it filled this last imbalance, right? We have a small imbalance here. Now it's filled. It filled to the tick. What else we have? We have this crazy equal highs building up liquidity. So that's exactly the example I gave you before. Liquidity building up. FU candle takes out the liquidity, taps into this 1 hour IFC. You cannot take it from here. The stop would be too big. What you do instead is you go to the 1 minute. You have this proper imbalance fill. Look what happened. So we go to the, oh yeah, we can even stay to the 1 minute, but just let's go to the 5 minute once again. Okay, where is the last imbalance in this area? Draw it. Okay, fair enough. Okay, that's fine. Let's delete that. The last valid imbalance is this area right here. So what you can actually do, because this imbalance is already filled, it does not need to go higher because this was the last imbalance on the 1 hour. What you can do place a pending like this. Stop loss goes above here. Okay. Or if you don't like that, wait for break of structure. Gives you this equal lows once again. Where is the last imbalance here? Draw it. Very good, very good. There you go, there you go. Very good. So let's delete it again. The last imbalance is this IFC. So what you can do instead, you can refine it. So what you do is you place your pending order like this. And out of a sudden, you just refine a little bit, right? That's good. It's refined is always better. And let's see what happens. Messes around, messes around, messes around. Okay, messes around, messes around. Whoops! What is going on here? Equal lows, equal highs. FU candle taps where? Into our last IFC. Based on the bigger picture play, equal highs, last IFC, last imbalance on the 1 hour. Now you made sense out of it. Now everything made sense. So you are in this trade already. Okay. So congratulations to those who saw it. So now where should be your take profit? Because that's part of the game too. So show me the last liquidity zone. Okay, okay. Fair enough, fair enough. Fair enough, okay, okay. Okay, so you have two options here. You can play it safe or you can play it aggressive. So let me just remove that drawings. Okay, if you want to play it safe, your target should be below this area. Okay, so below here. Because you will break it. So to the ones who saw it, that's already 1 to 16 or 1 to 20. Okay. If you want to play it aggressive, you place it below here. Or you take partials if it's below here, and you close out the majority of the position below here. Because that's your two liquidity zones. Okay. And if you see this, will become very important later. But that's for now your two valid liquidity zones. This one here, take partials when it breaks this one, because you will get a jerk back, and take it off if it breaks this low. Let's see what happens on the 15-minute chart. Boom. Goes through it like butter. Nothing. Nothing. You could, if you would look at I've seen here, smashed through it. So TP1 already hit. So now if you want to play it a little bit more risky, you can hold it, obviously just partials. But there you go. Just broke this low here. Again, why? You should not look at I've seen here. Liquidity grab needs to be done first. So you took this trade 1 to 24, 1 to 23, and 1 to 30. So congratulations, it's your first 1 to 30 and 1 to 20. So the day is almost over, right? So it's 19 o'clock for me, so it's 18 for the London guys. So yeah, nothing really gonna happen now. It will chop around. So it's a very good point to take most of your position off if you want so, or just if you see this, what does it do here? I hope everyone can see that they're again building these equal lows. So that's becoming our next target zone, right? So, but now the day is almost over. We don't want to do anything here. We took some partials. So I'm happy. That's not a bad day for one pair. A 1 to 20 or 1 to 30. Not bad at all, right? So let's see what the next day does. So we have this small inducement. What they're doing. Okay, okay. Building liquidity, building liquidity. Okay, show me on this right here, where's your last IFC, your valid IFC? Okay, that's good. That's good. Very good. So let's delete that. Let's delete that. Oops. Okay. There we go. So let's see what happens. Building up equal highs. And what is this? Let me go to the 5 minute. And now something new comes into play, which some of you already know, is the Asia session. We will do a whole new call on the Asia session because this is a lot of things going into this. Not that easy how you think it is, but it's just for now. Keep in mind that the Asia session is a really good guide for liquidity. So if you see something like this, like a high here, chances are really good that you will induce the Asian highs first. Okay, so that's a good trap too. So if, for example, if you look at this area already, that's not a point you should look at. You look higher than that because it will get broken first because it's the high of Asia. You want to induce the Asia session first. Okay, so this in here becomes your valid IFC, right? So if you look to the 50 minute again, it's not that clear though. Like it would be this wick. It would be right like this. You have this imbalance. You see, I hope everyone can see that. You have this imbalance inside here. So the imbalance is properly filled like this. If it comes here, it is filled. It does not need to go higher than that. Okay. Just remove this box here. There we go. But again, watch out how it is above the Asia session. Exactly. So that's even better. So you have this Asia session high getting induced, equal highs building up here, Asia session high, liquidity building up, taps, boom, right into this IFC on the 50 minute. So this is technically filled again. You cannot take it from here because your stop is way too big. You cannot take it from here. So what you do instead is you go to the one, and that's a hard one to take, but I'm just giving you this example because sometimes it is not so pretty, but yeah, that's just part of the game. It's a little bit hard to take on this one. So yeah, I took this trade by the way, but it's a little bit hard for the non-experienced guys so far. So I took it right here. Why? Because where is the last IFC in here? It is this. There's no IFC, there's no IFC. So this is your last IFC candle, right? That's your imbalance. I hope everyone can see that. That's your last IFC. So the entry, for me personally, it was the body from this IFC right here. Stop goes above here. And this thing will shoot down. Okay, I mean, that's a little bit a difficult example, but again, it's the lead up which makes this trade valid. You have this Asia session building up, equal highs, liquidity lies above Asia session, inducement of Asia session, taps into the 15-minute IFC, boom, entry on the 1 minute, tagged in. So show me, where should your targets be if you took this trade? Just if you see something like this. Okay, very good, very good. And if you zoom a little bit more out. Okay, okay, very good, very good. So let's see how this played out. And let me give you some nuggets too in the process. Why not? So yeah, you're in this trade, right? So again, for the guys which are a little bit more experienced, what is a really great liquidity zone as well? It is the Asian midline. Okay. What do you have here? Equal lows. Okay. This is your Asia midline. If you go to the 5 minute now, I mean, you could see nothing in here, right? If you go to the 5 minute.
Hey, Reem, sorry.
Yeah.
Yes, Eunice. I targeted the 1 hour equal lows, which was a big liquidity grab for me. It was just above
on the high
124.
side. Or what do you mean?
Yeah,
Where
it was
was
just
the target?
It was just above 124.
124.
It was on the 1 hour.
Yeah. Oh, you mean on the downside?
Yeah.
Oh, yeah, that's a very good target for sure. We will come to it later. That's a very good target.
Hey, I had one more question for you too. Can I annotate just really quick?
Yeah, sure, go ahead.
So just to like super like clarify, can you zoom out just a little bit? For the
Which time frame?
too much. No,
Okay.
I think this should be fine. So when you're looking at you're looking at these equal highs, right? For
Yeah.
So are you taking this high into consideration over here at all?
This one right here.
No. Right there. This one here. The one that like kind of like if you like put like a line from there, it like sort of matches up with this one.
Not sure what do you mean. You mean this wick or what do you mean?
Yeah, that wick. Yeah, that wick right there. Are you considering that like as part of like the equal highs that comes across like that over here, or no, not that one?
No, I mean you could refine it to the 5 minute. For example, this is your IFC in here, but then obviously you would get not triggered in because the 15 minute, and sometimes it's not a good idea to refine it too much because you will get left behind a lot. For example, the imbalance is properly filled already, so there's not another 15-minute imbalance, and the market will not fill every small imbalance right away. I mean, still, yeah, sure, we have some imbalance left in this when this is getting filled, but again, that's why we're not placing a sell limit in this, because you have to go all the way up. That's way too big. That's why we trade the reaction from the 1 minute. So we have this equal highs, as you said, building up from Asia. So this is a major liquidity zone. The Asia high is a major liquidity zone. So you expect this to be triggered, to be broken by just a little bit. That's enough. And then you tap into this 15-minute imbalance. So the imbalance is already completed, right? Then you have this 1 minute IFC, which left an imbalance, and that's get filled. That's where is your entry, if that makes sense.
Yeah, that makes sense. So you're not okay. So then you're not looking at that other high then. That
No,
was made
it's
at
the
all.
combination of things. You have to always combine a lot of things to leading into trade, because at the end of the day, it's about the bigger picture. 15-minute is already filled. You have this equal highs building up, Asia session getting induced, taps into this IFC or imbalance on the 15-minute, and you take the reaction based on the 1 minute IFC in here after the trap zone was triggered, right?
Gotcha. Okay.
I hope that makes sense.
Thanks.
So let's give me a few nuggets here, additional stuff. And let me delete these drawings. There you go. So you have this Asian midline, right? Which is a really amazing liquidity zone as well. Obviously, this thing will not pull back like in one solid move. No, it will go up and down, up and down. So a possible pullback zone would be an IFC, obviously, right? But which IFC would you pick? Would you put this, or this? Which IFC would you pick? There you go. I like it. Very good. Awesome. Exactly. We will pick this one because it is lining up with the Asian midline, gives us confluences of events, and adds even more liquidity into this IFC. Okay, and look what happens. So, I mean, you could actually, that's what I did. What is this yellow box doing? Whoever drew that.
Sorry.
It's good. Oh, there we go. So what you can do, because you're expecting a pullback and you saw me doing it on a daily basis, you can do something like this. Because again, you have this equal lows building up, boom, it taps into this IFC. But again, then you have to know when to get out, right? Because this is just a pullback. This is just a pullback, so you target just this thing. It's just a small thing, additional thing to know the pullback stuff a little bit better. So you will not aim for whatever, just aim for the pullback. But it's always fun to trade the pullback as well. So you get out here again. There's even a possible re-entry in this area. I took that too, but it's a little bit too advanced, so we will not cover this one. But yeah, for now, just see how the market reacts from these liquidity zones in terms of pullbacks as well, right? So I mean, there's a possible re-entry, but that's none of our setups so far, so we will not cover that one. But yeah, that's what I took. But again, this one you should take. So, and again, where is the target zone? Where's the target zone for this year? Draw it. Okay, okay. Very good, very good. Okay. So at least we should target, let me just delete it again. At least we should target this lows here. Look at this, all these equal lows. That's a ton of liquidity. So I would not even target this because it will shoot through it like nothing. It will shoot through it like nothing. Okay. So because there's so much liquidity lining up, so it will actually go lower than that. But again, if you want to play it safe, you get out after this liquidity zone or even partial out. That's a 1 to 30 already, right? Just partial, so that's not bad at all. So what you learned before, you broke this equal lows. Where's the next liquidity zone? Then the IFC, it should react from. Where is it? Draw it on the chart, please. Okay. Okay, okay. Okay, most got it wrong. Most got it wrong. It is, in fact, let me show you why. It is, in fact, this one right here. Yeah, exactly. It is this one. Why? This is just a volley block. I mean, it will be very important later. It will be very important later. But for now, just if it is an inducement run, you make
That
it
broke structure. That's why.
Sorry?
It broke the structures, though.
Exactly.
That broke it.
Exactly. Very good. So this is again a structure point. So if you break that, it's even nicer. So if we remove the drawings once again, this becomes very important area. Not like a major thing, but a pullback zone. Okay. So what we will do, just in terms of the pullback zone, we have two things we will mark up. We have this volley zone, volley block type of thing, will be very important later. But our major thing is, in fact, if we make it like this, it is, in fact, just right here. This becomes a valid zone. Not this one, not this one, not this one. Below the volley block, it is inside here. So if we go in here, you can see that this is our major zone. So if we go to the 1 minute, see if I can find it. There we go. But it all, again, it's based on the bigger picture play. I hope everyone can see what I mean by that. Whoops. Oh no. That's not good. Wait a second, I just deleted something accidentally on my error. Oh my god, what did that just do? There we go. Okay. So what you have in here, this is your volley block. So you target lower than your volley block. And what is your last point of balance? It is this thing right here. Or not this one. What do you think? What is it one? Which one which one we would aim for?
I don't know.
Okay. A lot of stuff in here, a lot of stuff in here. Okay. So, in fact, let me delete that. It will be this one, exactly. No, just joking. No, it will not be this one. Why? You have this body block here, you have this major small structure break here, you have this small structure break here. You will not have this one too, you have the lower one. So it will become this one right here. Always think in terms of the last imbalance on. This will be a thing which will happen later. So, but now, if you look at the bigger picture, it's a little bit hard probably to get it right now, but you can see it on a bigger picture play that it will be inside here, right? So not inside here, not inside here. It will be inside here because this is your last point. This will be a roll 2, right? But this will be your point, which gives, and Ines talked about it, the last thing which should create a lower low and stuff. This becomes your supply turning into demand, right? You can see it on the bigger time frames, on the, like in the 15. So you break it down to the 1 minute to see your last structure point.
Just a quick question.
Yeah.
Is it because it's like the last major structure low underneath the liquidity that is broken, or?
Yeah, so it will not be this one, because this one will, like on the 1 minute, it is a little bit hard to get right away, but you have this zone right here. I mean, you have this major liquidity zone right here, but there's no IFC in this area. I mean, there's no imbalance left. So it will not break this one right now. So it only can be this one, because it will have to induce this and this small equal. I mean, it's the same thing on the lower time frames too. So there's not really an imbalance, not really an IFC. The last imbalance is this area right here. So this will become your IFC, your valid IFC. So your stop should go below this one. Okay, that's the best bet you can do. I mean, it will be coming with experience, a lot of back testing. It's a little bit hard to get right away, but once you get a little bit more familiar with the concept, this will make sense. So if you
Wait,
go back,
why is there no imbalance under? Wasn't there like a very, very small imbalance on the candle before it?
I think an easy way to look at it is if you look at the 50-minute, that's where your push actually started. That's where your 50-minute swing actually started and broke the major structure and price turned bullish again. Look,
that's what I was thinking.
Yeah, if you look at 50-minute ring, you can see that that was the start of your actual push that broke the structure to the left side.
So just think about it like that. Like you have this already be filled, right? So you have this small thing in here, but this is the last equal lows stuff, and that's not really an IFC. That's not really an imbalance. I mean, obviously you can not say that this is like a one tick imbalance in here. That's not how it works, right? You have to have a clear imbalance like this, and this is the last candle which provided you something like that. Below this equal lows on the 1 minute here. I mean, that's a tough one. I'm just telling you how it actually is. I mean, yeah, it's a little bit hard to get right away, but this is the thing. And as Dennis, I think it was Dennis, right?
Yeah.
Yeah,
it's much clearer on the 50-minute, right? But you have just find the refined IFC inside here.
Got it.
Right, but I mean, last point, which should turn into low is this right here. And the push starts from here. So this is your valid point right here. I mean, this is your value block. This will become a major thing later. But the last IFC.
So because they made that big push, it's considered a IFC.
Yeah, Ines talked about it very good. So think about it like this: you have this downtrending mark, right? This broke the structure. It's not really a big deal because it's all still inside here. But this should create a lower low then, right? But it did not. So this turns into your last point of, yeah, like changing momentum or whatever you want to do or want to call it. But this is the last point where it did that, right? So this will be not this one. It will be this one because this started this push upside, right? But okay, just
So pretty
move on
much
here.
because that's the push that led you to break of structure.
Yeah, exactly. That's it. Okay. So
Hey man, not to interrupt, but I just have one question because like I
Yeah.
always ask myself this question.
Okay.
So when it does live that last imbalance, let's say it tries to do like maybe a little pullback before it or whatever the case may be, right? It'll always go to that imbalance. Is that what I'm getting? It'll always go to that last imbalance.
It depends always on the structure. I'm just saying like this is the zone. You should watch out for possible pullback zones, like based on the 50-minute, right? So if you want to refine it on the 1 minute, that's something you have to solve out yourself with a lot of experience. There's not really a hard rule for it because sometimes it leaves even small imbalances and just taps into, yeah, like a not random zone, but you don't really know exactly in which zone it does. I'm just telling you this made the most sense in this type of example. But there's not really a hard rule for it to say like it has to be the last point of imbalance or whatever, because sometimes it will not do that.
It's
But on the sorry?
It's the most probable, is what you're saying. Like that's the most high probable trade.
Yeah, exactly. But you could not, or you don't have to play it on the 1 minute. You just have to watch out on the 50-minute. This will give you a proper reaction, and you can see it in the 15. Hopefully, very clear, right? This should be clear on the 50-minute. So yeah, if the 1 minute is not so clear for you, then just don't do the 1 minute stuff right away. But just know this is a valid point. Again, why is it? Based after all these equal lows building up, and the last point which provided an IFC is this. Okay, so that's the easy way to see it. See the last equal lows building up, and the last IFC below that is this in the 50-minute. Just refine on the 1 minute. And yeah, I mean, you can just try it out yourself, but this will probably be the zone where we get the pullback from. So this thing will push us down, boom, 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 and taps exactly where we expected it to do, right? So just fire an alert here, right? I mean, you can, again, that's the hard thing to do, is to put a pending here. I do it sometimes, but you can put a pending if you found this zone correctly. I'm not saying you will do this right away, but this will come with experience. You don't have to do it like that. Just fire an alert then in this area. If you're not sure about the 1 minute imbalance stuff and whatever, just fire an alert in this area. And if it taps inside here, just watch price action. So yeah, if you watch the price action here, this was your lot. Yeah, this one will not getting, I was looking at this one too, but yeah, this will not getting triggered. But yeah, that's the problem with the 1 minute imbalance stuff. Sometimes it will just leave you alone, or it will leave a value. So sometimes you have to, yeah, I put the pending here and inside here, but it's just a little bit advanced. You should not do this right away. Just understand the structure and the intentions of the pushes and stuff. But yeah, but this thing left without us, unfortunately, then. Yeah, because it shot. If you push this area, it will just live, right? So the only thing you can do is this, and here is the last point, which should create a lower low, so you can take it from here then. So this would be a trade right here, from this to here. Okay, this is the only option it gave you on the 1 minute, and nothing else.
Magic.
So, yeah. Sorry?
I said magic.
Yeah, it's a hard one though, but it's very important on the bigger picture stuff, because what we will do now. Yeah, sure.
If you just go back to the 1 minute on that entry.
Sure.
So does it matter in this case where the previously engulfed, the candle that was engulfed, if the candle that follows it that is engulfing, if that candle trades lower, does that not invalidate the presumed IFC?
Which candle do you mean?
Hang on, let me see if I can annotate it here. I mean, it's very minor. but it's just a question that I've had. So
yeah. Okay, let me show you. Let me get it something like this. If it will come back in here once again, this thing will hang so low at the same time. It will create this illusion again with the support and whatever stuff. And this is too much. They most likely will not do that, because just think about the market is they don't want people to take this buy opportunity. So that's why they try their best to not show that here is a valid zone. If they will come here once again, this is too many touches. 3 is already too much from me personally. So if it comes a fourth time back here, I will not even take this one, because then the equal lows building up here is so great that the chances are very bigger we will break the zones, right? So I actually won't expect this here, because again, it will build too much liquidity and they don't want that. But again, that's a little bit more advanced. I just want to give you the bigger picture about equal lows. Last IFC on the 50-minute is this right here. You just refine it on the 1 minute, and that's exactly how it tapped into. So what we discovered here then, this was our volley block, right? So if you go to the 5-minute, make this a little bit clearer. This is the volley block we had here. And what we had here as well, in the same area, for some reason, we had a volley block too, right? So it tells you that something has to be in this area, because there's really nothing on the higher time frames, or even 1 hour, that could provide you anything. See, there's nothing, there's nothing. But on the 5-minute, on the 50-minute, for some reason, there is a volley block inside here. See, crazy down momentum. And then you have this volley block here, and then it crushed more down. Same thing on this direction. You have this move up, volley block, and then it moves further. Crazy, that is same area, right? So it has to tell you that there's some liquidity trapped in here. I don't even know why, but you can see it on these 2 candles being in the same exact spot, right? So when you took this buy, this is actually your TP. You should not take it higher than that. So again, this is just a pullback trade. So you should get out here. For sure, you should get out here. And again, what you can do, what you have now, you have this imbalance tapped in here from the 15-minute. But again, where is the liquidity lying on a bigger picture? Show it out to me, please.
Right below the low.
Exactly. So we should aim for this to be broken instead of this being the continuation thing, because our major trap was this right here. So we will aim lower than this. So this is just a pullback trade, and our target should be really below here, right?
So if I can ask a question, Reem.
Yeah, go ahead.
So on Monday or Sunday night, Monday morning, the major liquidity trap that you just pointed out was created, right? This one.
Yeah.
So the whole week you expect to trade away from this, or is that just too basic?
If you see a major trap, you should always trade away from it. Like this is a major trap. I mean, the next trap would be all the way up here, right? If it breaks this thing right here, then the next trap will be created. This thing was a trap at one time too, right?
Yeah.
Not really a great trap, because it was staying inside this, really giving you this equal lows. So it's even building up liquidity more than trapping something. But this thing does not build liquidity. There's nothing in this area where it builds up equal highs or whatever. It just breaks this, and stays inside this area in this no man's land, right? So this is not a liquidity build-up like this. It is a valid trap. Like, see this?
Yeah.
It creates equal lows. So that's not a real trap. It's just an equal lows being induced later on, right? See the difference?
Yeah, I get you. And I see a lot of questions now in the chat, and everybody's asking you what the what makes this a trap. What are the requirements for to make it a valid trap?
Yeah, a valid trap is something which does not create equal lows or whatever. Like a valid trap takes out much liquidity. See this equal low, equal highs, and this thing just smashed through it and then gets away from it. So traps will always have like spikes above it and whatever. So this, if you see something like this is a trap. This is not a trap. This is an equal low liquidity build up. I mean, you can trade away from it for a while for sure, but this will be taken out for sure because the liquidity is lying below this. So if you see something like this for an IFC, once again, you should not take this for the long other than a pullback trade. So if you look at this on the 1 hour and you see, oh yeah, this is my IFC, you can trade it. I showed you how to do that, but you have to keep in mind that the liquidity is lying below it.
Exactly. So a trap takes liquidity and immediately starts trading away from it, right?
Exactly. Same thing like this. This is just a trap. I mean, not a pretty one, but it's just a booms, and then it is away from it.
Yeah,
this
and
one
if
was
you
actually
want-
a little bit prettier.
Yeah.
So if you look at this in the 15 minute,
Yeah,
it's
yeah,
just
cool.
a pure trap. Equal highs, boom, taps into the trap.
Okay, cool.
Okay.
Thanks.
So we have to keep up a little bit because I'm so far behind the time schedule. Should be way more. Yeah, we kept a long time in with only this example, so and that was not even a good one. So shit.
Okay, cool.
Okay.
Go on.
So this is your pullback zone, right? But what you can do instead is, as you noticed before, the liquidity lies below here. So please again show me where is the last IFC with the last valid IFC in here. Just about the liquidity zones and stuff we mocked out here. Exactly, there you go. Very good, very good. Okay, I have to keep up the pace a little bit here. That's exactly it. Okay, very good. Okay. So, no, not the above one, not the above one. It is exactly this one. So you can even break it down to the 3 minute to make it even more clearer. I think everyone can agree now that this is a beautiful, beautiful IFC. So what you can do, it's inside the volley block, gives us even more confirmation for the liquidity. You can even make the 1 minute if you want to do that. And yeah, it's not so pretty, so I would stick to the 3 minute. You see the difference about switching from time frame to time frame? So let me just delete this again. There you go. So you see, if the 1 minute is not clear, not really an imbalance, you just switch to the 3 minute, and it's very, very clear now, right? So you take this one. Stop goes above here, and let's see what happens. Building equal highs, messing around. Equal highs, equal highs, equal highs. Switch it to the 5. Equal highs, messing around. Boom. Taps into your entry to the tick.
So for this instance, you would trade
And
during Asia.
Sorry?
For this example, you would actually trade during Asia. Because this is an Asia session, right?
No, that's 8 o'clock. Like that's 7 for you.
Oh yes. No. I'm same time as you. Oh yeah.
Oh, okay. So yeah, and again, if you look at the bigger picture, liquidity zone is, as we said before, it is below here. So we should aim way below this, right? If you zoom out then to the 1 hour, so if you take this out, this equal highs, what is your next zone where you want to see price go? Okay. Think about the equal high stuff and stuff. So where's the last point? Maybe we should take it out. Okay, very good. So we aim, I think everyone agrees, we should aim at least below here, at least. Okay, so if we remove that, so we aim at least above this area, and what would be a valid zone where we should look for a new entry in? Like a last IFC for the next. Okay, very good. I see you guys grasping the concept here very fast, so that's amazing. That's exactly how it works. So if we delete that and just keep for the 1 hour to save us some time. Boom, we smash through it like butter again. Took this trade. Bum, bum, bum. There we go. Smash through these liquidities. And this is the area we're looking for. But again, this is a little bit tricky example. So if we look to the 4 hour. Okay. So this is a tricky one, but it's actually the last thing we will cover so far because it's so far behind the time schedule. So if you look for this one, that's not a good idea. You should look below this one. Why?
It's gonna hit an inducement to
Exactly. It has to induce something too. Not only break the you have the okay, let me see where we at. You don't only have to break the equal highs, you have to induce something too. And what's the last thing that can be induced? It is this exactly thing. So you look for lower something like this. It should be inside this area, but lower than this point. So you have your last point of inducement as well. So it should be in this area. It should be lower than this point though. Because the last thing you should always look for, as I talked about at the beginning, is the inducement. So it should be lower than this, but inside this. Okay. I hope that makes sense because you need an inducement first. That's the most important thing. If you take one thing away from this call or with this call, think about it in terms of inducement and liquidity zones.
When you say inducement, because I still kind of struggle with that a bit, you mean for it to just take the liquidity and run in the opposite direction?
Yeah, so very good question. So you have this major zones here, right? It's liquidity buildups, equal lows, equal lows, equal lows. The last, you always need an inducement first before the IFC comes. Like in this example, the last IFC was taken because the inducement was Asia. So you have an inducement of Asia. This thing here induce nothing. That's why it's not a valid IFC. That's why it's a pullback IFC. You see the difference? This doesn't induce nothing. It only breaks these equal lows, but it induces nothing. It only breaks the equal lows. That's why it's a pullback IFC. That's the difference of true IFCs and pullback IFCs. Sure, you can trade this. I show you how to do it. But then there's no inducement. So this probably will get broken as well. And if this one will be the valid one, yeah, this will probably be broken too. But if it's a true one, it will break below this area to give you the last inducement in order to be a valid point, and you look something inside here. If we go to the 15-minute, I hope we can even go so far. Yeah. And you have this inside here, right? And see, there's an imbalance, right? So the imbalance is really from this here to this. It should be not inside here. So you take it from here. That makes sense.
I wouldn't do the lower one.
Sorry?
Can I add something to it?
Sure, go ahead.
So if you could zoom out a little bit, I would just highlight some stuff. So this is something usually Yunus talks about. This would be a break of structure. This would be your last low, this area. So this would be the failed lower low, basically. So this area fails to create another lower low. So in the overall picture, what we are doing is like mitigating this place. If that makes sense. It's like the smaller price action, basically. So we will normally mitigate on this spot.
Okay, yeah, that's a very good point too. Yeah, sure, you can see it like that. That's not bad at all.
If that helps somebody else.
Yeah, sure. That makes a lot of sense.
Wait,
Sure.
Reem, why did you pick that point out of all the others? Because I'm so like, it seems like it's like in the middle of an uptrend of some kind. Because like I kind of joined this call a little late, so I might be missing something.
Okay,
like, it
so-
seems like the point you picked was just in like the middle of a trend. And I don't understand why.
Okay.
Pick that point.
So let me just draw something like this. So what you need first for a valid IFC, if you want to look for the upside, is something like this. Okay. So you have this equal highs, and I've seen here. And then you want to look for the inducement tapping into this IFC, okay? That's valid. Okay, so, and now look at this example. Oops, let me delete that. Look at this example. Obviously, you induce this equal highs, equal lows and stuff, but the last thing should be an inducement. Only if it breaks the equal lows does it not make valid. It has to induce at the end of something. It has to induce something so it breaks this to fake everyone out. And because again that the pullback will come, and it don't want to be as a lot of people should see it, right? So it will have to induce it first. And that's exactly what happens all the time. I mean, it's a concept we probably need to make an own call on itself, just about the inducement I'm just trying to give you the bigger understanding of the picture. Equal lows building up, look for the FU candle or whatever, taps into an IFC. If there's no inducement, it's probably a pullback. That's why this is valid, but we know that this is only a pullback, so we will close it out at the volley block, we re-enter it again, go for the major liquidity zone. So if we are in the major liquidity zone now, then again, we will induce, we will break this equal lows and stuff, and the last inducement point is right here. Okay, that's why we'll break below it.
I mean, I guess I was asking, why is it not like a point below or a point higher?
That's your
Because I do see like the equal lows are like there, but it seems like there's 3 points that it could go to. Like I could see it going to like this point, this one over here.
Last lower high. So if that lower high is broken, what will happen? Sellers will get induced to the market, right?
Okay,
so
that makes
when
sense.
your last lower high is broken, sellers will get induced to the market, and then they will reverse the opposite way to take out the early sellers.
Exactly.
Okay, this is like the last. It was supposed to make a lower low, but it didn't, and that's why you picked that point. Okay.
Okay. So,
Sounds good.
and if you look at the 5 minute here in this example, there's not really an imbalance, right? That's the tricky part about the whole concept, right? So there's no real imbalance in this area at all. So if you play this IFC, the only thing which cannot, if this is your last point of imbalance, you would be like this, right? I mean, that's a little bit too big for, I mean, not even close. It's way too big. So you cannot make it like this. So you have to search a place where it makes the most sense. And this would be this, because there's only the last thing which makes sense to be the low, because there's not an imbalance other than this in here, but it will not be this one. I mean, that's a concept. It's not really that easy. That's why we're not digging so much into it. Again, it all comes from the bigger understanding of the stuff which will going on, the inducement stuff. Yeah, I see. We probably need to make an own call on itself, just about to cover this a little bit more better. But just to show you this, how it played out, and yeah, it tagged exactly into this area. Yeah, it's so hard to explain it like in an easy way, but yeah, that's pretty much the only way to explain it, just in a nutshell, right? It will not break it, it will pull back, but now it's at the end of the week. So you could take the trade for sure. You wait for London to happen and you take just a reaction once again. Again, you don't need to put a pending in here. You just wait for the reaction, you wait for the break of structure in this, and then you take the trade in here, right? So that's the only thing you should have to always keep in mind. But
Hey,
I know.
Just oh, sorry to interrupt you, bro. I just had a quick question actually before you did proceed. It's just going back to where you'd marked the entry all the way to the left.
Okay.
And I spotted, I think, which could be considered as a level of liquidity. So if you were to scroll back, just
Oh,
a
you
bit,
mean all the way back, like to the?
yeah,
to the oh, okay.
the purple zone.
Which time frame?
I think it was the 5. Yeah, it might have been the 5.
You mean this one? No, you mean all the way back this, right?
Yes, please. Yeah.
Okay.
Yeah, so just there actually, and just where the entry is, slightly to the left. So I don't know if you would consider this, or you would be looking into this, even though very insignificant. There is a slight buildup of liquidity, and then a push to the downside, which then followed through with the formation of new structure. So would that be something that you'd be looking into, or would
Yeah,
be of
exactly.
any interest?
Because that is the concept, like how this should create a lower low, right? Because this failed to create a lower low. But if you
Exactly.
take this one, that's not really an imbalance in here. If you look at the 15-minute, the last imbalance was the point we marked out above. Right? So the last imbalance is really inside here. Right? Oh, not the 15-minute, sorry. It was. Wait a second here. It's so annoying to have to scroll all the way up. So we have this, it has to be induced, right? So that's what we know. We have to know that this is getting induced. So we have this in here, which failed on the lower time frames to create the lower lows, right? Because obviously this created this pushes and stuff, and this was the one which failed to create the lower lows, and this becomes your support, turns into supply turns into demand stuff. But we need an inducement first. That's why this in here cannot be the area you should look for. Because if you have this major trap zones being induced and stuff, you need a last point of inducement first. But what does it do now? So it's building again this liquidity zone here. So this will probably be broken as well, right?
Yeah, okay.
Because this is again not really a nice trap. It is so building up equal lows and stuff. This is something we probably will break in the future as well, right? So I hope everyone sees this concept. But again, it's not easy. But again, this market obviously is not easy. That's why it is a little bit more complicated. But the good news for you guys, I have rules way deeper, which explains pretty much everything in great detail. But that's a little bit more advanced stuff. And again, you can see what you can do in an intraday perspective then, just in the terms of like the charts and the trades I show you and stuff. It will all be coming. It will all be coming, so don't worry. Just for now, the basic stuff is look for inducement phases to the liquidity zones before you're even considering about taking a point of interest or an IFC. Always look for the liquidity being taken out first before you look for a point of interest or an IFC. That's the only thing you should learn in this call, because it will go so much more into it that you need to understand this basic concept first. And then I will explain much more in detail why the market is doing stuff like it does. But first, understand the bigger picture, inducement phases and the liquidity building ups and stuff. I mean, I want to cover actually a little bit more today, but yeah, I'm so far behind my time schedule because this took way longer than expected. So yeah, we will probably make a few other calls for that. But yeah, I hope that makes sense at least. I guess it's a little bit more difficult and harder to explain, and yeah, but I hope it makes sense. You guys, please? Okay. No, that's not even close. I actually wanted to go a little bit more into detail, so sorry about that, because I actually planned to dig a little bit more into it, but this took a little bit more time than expected, and I had to go, believe it or not, like half an hour ago. So
Raim?
Yeah.
I'm glad you are in WWA now, but let me ask you something. What you came for WWA to learn? You know, like this stuff we don't learn on WWA. So you came for learn what? You know?
Yeah, the smart money concept was new for me too, right? So I knew about all the stuff before, like the way I look into the trades and how the whole process leading into the trade, that was something I did before. The only thing which changed everything pretty much for me is the last piece of the puzzle, which gave me the refined IFCs, right? So
Oh,
that's why I'm
okay.
yeah, I mean, that's the best thing would could happen to me, right? Because now you can see it on a daily basis. I can show you this once again, obviously, and I hope you guys see that I don't show it or whatever to brag or whatever, because I know some people could think about it like that. I hope that's not what you do, though. It's just to show you what is possible once you figure it out a little bit more. But we have to start somewhere, right? We have to start at the basics, and the basic concept is just that the market moves in liquidity zones. And once you got that, and once you understand a little bit better, once you practice a little bit more, we can dig way more into it. And I mean, we did not even talk about the session timings, the timing aspect itself, the inducement phases properly. Now we only alter the foundation stuff, right? The core material, if you want so. And what is going into the material from now on then? Yeah, you guys will be, yeah, it will blow your pants away, to say the least. I mean, you will sit on the chair and your pants will just fly off. Not even kidding. Yeah, you cannot even hold them. If you even try to hold them pants, you have the best Louis Vuitton belt, it will just rip away.
Goosebumps already.
One question, Reem. How you doing, brother? I'm a person who's not able to sit in front of the chart all the time because I have a profession, and it takes a lot of time. And I know we do a lot of intraday trading, but one day, can you have a call on how you can do swings with pendings for people who can't sit in front of the?
Yeah, sure. That's a very good point. That's a very good point, because I know some people don't trade full time, and yeah, that these guys should have opportunities as well, right? But the only issue with that is that it doesn't matter what time frame you trade, even if you only trade the daily time frame or whatever. Your entry is always based on intraday execution, right? Even if you place a pending or whatever, you always have to combine it with lower time frame stuff, because you can place an order on the daily chart, but then you have like a 70 pip stop or whatever, and that doesn't make sense.
Right.
So in order to refine the entries, you have to look at the smaller time frames. So what you can do, though, you have this like, what is going on with the screen, by the way? You have the zones, the points of interest where you can put alerts at, and then you have to manage somehow to watch at the lower time frames at these areas, right? But we probably will make a whole concept about this as well. But what we have cooked up for you, which will slowly but surely will release. Yeah.
When's your next call, bro? How often are you doing these calls?
Yeah, because we were in the works for some stuff, and I just wanted to cover the basic first to see where everyone is at right now. But I think we actually have to make another one. I have to prepare a little bit different then, because I actually want to move a little bit further today. But yeah, it seems that the inducement stuff's causing a little bit more trouble than expected. So we will probably make another one.
Yeah,
just
Rain,
about
I think if we master this, then obviously once everyone's understanding of it is better. The next call you'll do probably leave questions till the end. Otherwise, it's really difficult to always get through what you've got planned written down.
Yeah, that's the only thing. The one thing I want to keep moving on with the material, but the other thing I can't move on if people don't get it so far, right?
Yeah.
That's the only...
The basic understanding is that you have to have liquidity taken out in order for price to push, create a new leg.
Exactly.
That's as simple as that, you guys. Don't think about it too much. You have to have liquidity taken out before a new leg is made.
Yeah, that's the most important thing.
And it has to entice either the buyer or the seller, whatever it's trying to do.
And that's on the 1 minute time frame, and that's on the daily time frame.
Right.
So it just needs to build up liquidity. And the funny thing is, they will show it to you. I mean, it is right in your face with the equal highs and stuff. It is right in your face.
It's the same thing. Look for equal highs and equal lows, and below or above it is hiding an IFC. You'll see imbalance and an IFC hidden below or and above equal lows or equal highs.
Exactly.
That's the Reem's basically telling you. That's the liquidity. The double bottoms and the double tops.
Right, exactly. And I think a lot of people maybe get overwhelmed because they're looking at so many pairs. Like, I only trade UCAD.
Exactly.
And
Look for-
I
look at one
take
pair.
pips out of the market every single day because I only focus on UCAD. And I think that these people are like having these huge watch lists. I'm looking at all these setups and they're just getting overwhelmed. Which trade do I take? Which trade do I not take?
It's not that.
You guys,
Stop watching other people and focus on yourselves.
exactly.
Yeah, and
You're-
I mean, you saw what you can do with just one pair, right, on a daily basis. So,
Exactly.
and it's all about getting you guys to the same level. I mean, it's not meant to be rude over there, but we have to start at the foundations first, right, at the basics. But once you
Right.
get that and stuff, we will. I mean, we will dig so deep into it. It will be.
Bro, you did
insane.
that. Just did it. Like, just did it at like the Friday, I think, or something. I'm just looking at it right now, and I see the inducement. I see the pullback. It's like it's crazy. It's fucking crazy.
Yeah, it will take some time, but just try to understand it and even backtest it, obviously. And once it clicks, you cannot unsee it.
Yeah.
So it is something you always will wait for. Guys, please, like Tom Maxwell, shout out to your daughter. Happy birthday to her. I think she moved her birthday party into our chat, man. I think why is everyone drawing on the screen? Please stop it.
Next elementary school.
Yeah.
Bro, when do you want to schedule your next call, bro?
Yeah, we will get into the stuff. We will get into the stuff.
Wait, I have a quick question actually before we go.
Yeah.
I actually found that finding support and resistance levels is good for identifying equal highs and lows. Would you also agree with that?
Yeah, if you keep in mind that support and resistance is a false thing and it's created on purpose, then yes, then for sure.
Yeah.
Then you're absolutely right. Okay, guys. So yeah, again, I wanted to dig a little bit more into it, but we will probably do another call about the basic stuff and before we move on to the more advanced stuff. Yeah, to keep everyone on the same level first. But you did amazing today. I mean, some of you guys got a lot of questions right, so that's very good to see. And yeah, we will not stop until everyone is crushing it as well. So guys, have an amazing evening, an amazing weekend or whatever, and we will see you at Monday. Have a great one. And thanks for the Instagram shares and whatever. Great community and amazing.
Thank you so much.
Thank you. Thank you so much,
Guys.
bro.
You, bro. Cheers, guys. Have a good one.
This is fucking lit.
Cheers.
King.
Thanks.
Thanks a lot.
Thank you, bro.
Thanks, bro.
Yeah, bye.